Oh, good day. This is Si Wing Yi from the Yi List Network. I'd like to present the title Suburban Migration Benefits Single Family Rentals. And what does it mean to you as out-of-state turnkey investors? All right, so as you can see, my picture when I was in the U.S. Army active duty long time ago. So uh, the reason why I'm showing you this picture is because even before I started my network, I traveled all over the world and all over the U.S. Through my active duty military days. So it'll pretty much give you a better perspective of what's going on in the landscape of different areas of the U.S. So not only that, I've been to I was stationed in various places and throughout the U.S. over the years, long time ago. So that again, the areas that we're promoting, the various locations that we're promoting. Obviously, I've at one time or another, I have lived in those locations. Anyway, so now we fast forward to 2020 and in preparation for 2021. So time flies. So actually, as you can see, I was very young back then, back in let's say back in the early 1980s. All right. So that was the picture. I was stationed in U.S. Army Camp Casey in South Korea, close to the DMZ, the militarized zone, if you will. So great experience, to say the least. All right, so the reason why I'm presenting this is because the most recent data that are done by this research company, John Burns Consulting, and they continue to provide data that are important to us as real estate investors. So without further ado, let me go ahead and go over the highlight of this particular research study. With the pandemic situation, many of the apartment renters and the single family renters, due to high density living in the urban big city environments, those renters are, as you can see by some of the data, they are moving from the congested apartment living and even single family home livings in the urban areas. They're moving into the suburbs, all right? They are moving into the affordable markets. So the data right here indicates that the 41% of the multi-unit renters, they are, again, because of the health risk associated with the COVID-19, they are just simply tired of it. They want to move their families into a suburban area with a larger space, with an open space, and spreading out, and not having to deal with the high density health issues that the pandemic has caused. And furthermore, and again, 59% of the sometimes I need a glass of the are moving from urban locations as well, right? So you can see on this particular graph, 45%, 46% of the single family rent tenants, they are moving from the urban big city environment into the suburbs. Okay, so and then 32% of the apartment dwellers, apartment renters, they are also moving into the low density suburban areas, and the remaining smaller percentage, they coming from different type of living situations. So, and this article further states that surprisingly, with the all-time low mortgage rates, and the what's surprising is the people who are moving into the other living accommodations, for example, you might have heard recently that many of the millennials potentially are buying or trying to buy homes, right? And for you see tremendous amount of low inventory. We have a historic low inventory everywhere in the U.S. Couple that with the lowest interest rate, which is mind-boggling, beneficial to investors. And you would think a lot of people, a lot of millennials or people buying homes, but this data conclusively states that only 26% of the people that are moving into other areas, they're buying homes. That leaves, right? Do the math. That leaves like 74% of the people who are moving into low density suburban single family home living, they are renters. So really essentially one quarter of the people, they are moving from the urban areas throughout the US. Only one quarter of them, they're moving to buy a house. The remaining three-quarter of the people that are moving from the urban to the suburban areas throughout the US, they are still renting. So what does it mean? So what is the takeaway for these data? Well, I'll share that with you, right? So, and the article go on to say that with the belief that the migration of the suburbs will continue for the upcoming years, so which is a very good sign. And also, there are the key thing that we need to learn is single family or home or the primary beneficial for the renters. People, renters that are migrating into the suburbs, they rather the three-quarter of the people that are not buying homes, they continue to rent. They would prefer to rent single family homes primarily, right? So there's a good sign. So coupled with that, with the pandemic currently, there were about 30 million of people who are affected by the pandemic, right? The people that are either in the hospitality and in the retail industry that are mostly impacted by the pandemic, they are going to be renters moving forward into this coming year and beyond, actually. So those category of people who are not homeowners, who are renters, they will seek primarily single family homes to rent, right? So again, the takeaway for you, so as you know, the areas that we're promoting are primarily our recommendation for investors these days with the post-pandemic risk investing turnkey-wise are Florida and Texas. These two states are the primary recipient of epic migration of the I've been telling you all along, right, for this past year, there are mass exodus of people as a result of the pandemic have moved away from major urban cities such as San Francisco, Bay Area, and the Southern California, right, LA, Metro, and San Diego. People, many of them are high-tech individuals. They are moving to other more affordable, better markets, right? And a lot of them are other cities in the West, but many of them are coming to Texas, in Austin, for example, and San Antonio, what have you. And the big urban metros in the Northeast, people in like New York City metro and the surrounding area, and other large cities like Chicago and Boston and all the big cities up and down the East Coast, we have seen tremendous mass exodus and migration of people moving away from those high density urban environment into the South and Southeast. And South and Southeast, of course, to Florida mainly, right? So the locations of people that will be benefiting in Florida are typically in Central Florida and Southwest Florida, because these two areas are have the it's very, very affordable. As a real estate investor, you can cash flow in these two areas more than any other areas in Florida. That's why we're promoting our turnkey homes in those areas, as you know by now. For those of you who've been to our network, and of course, the people moving away from the mass exodus of a lot of people from Bay Area and Southern California and other areas of the Western region. They want to live in a nice area that is warm. I like warm weather. Okay, so and fast growing, high tech, and that's basically in Austin, Texas. So the takeaway for me, and hopefully for you as well, that if you wonder when you buy the homes that we presented within our network in Florida and Texas, you can be feeling good that the data and the trends are pretty much are very conclusive. I mean, so when you buy especially new construction, single family homes, or even the fourplex, the duplex, the new construction from our markets in Austin and San Antonio and Southwest Florida, Cape Coral, Port Charlotte, and Lehigh Acres and LaBelle, Southwest Florida, and Central Florida, which is the Central Florida. We have homes to investment homes to sell in various locations in Point Siena, in Kissimmee, and in Ocala, and in Palm Bay, right? So all these locations are considered affordable areas, cash flow areas, abundance of renters. When you close escrow on your new construction, right now or in the next first and second quarter of 2021, you can have the confidence level that there will be many renters want to rent your home. So the rental market in the location that we're promoting on behalf of the Real Estate Network is going to be very, very positive. So you should have very very good feelings about it. So this data that we're seeing, right, clearly is another validation and confirmation that the job and migration trend, current pandemic and post-pandemic, people, renters, your renters, right? You are the owners of your rental properties in the location that I just discussed, will be the primary beneficial recipient of all these rentals. People want to rent good new construction which was never lived in before, right? Those are good attraction. So all right, so again, the takeaway are the single family home rental asset class is the most desirable in terms of what people want, who the renters want to rent in a good location, in an affordable market, in the fast growth market, especially in Florida and Texas. And of course, you can the new construction, the value is such that the prices is going up. The lumber cost of construction is skyrocketing, so making the new builds a higher cost. So behooves real estate investors of you out there to potentially pull the trigger and buy the lot and just reserve the lot and write the contract and set just set the prices before the price is going up, right? It's just and also a lot of great potential. All right, so I think that's my conclusion. That's the recap. So as you know, the interest rate is just the last thing I want to say is low inventory plus historical low mortgage rate, especially for investors. Your rate for single family home like 3.2 to 3.3%. This is mind-boggling to get a mortgage loan, right? But anyway, low inventory throughout the nation for several years to come. low interest rate equal very hot real estate market, especially. So right now is a great time, one of the best time ever that I've seen in my history of real estate investing at this time. Moving to 2021 is a tremendous opportunity. It's a window of opportunity for you to capture some great homes for your real estate portfolio, and especially when the vaccine are being approved. So things are looking very positive as we move into 2021. So with that in mind, so as you know, the new construction lots that we have in Texas and Florida is very hard to get. It's very limited. So it behooves you to create the urgency, to focus on this holiday period to get under contract into this great locations, great cash flow areas, great affordable markets, good cash flow, good returns, and what have you. All right, thank you so much for listening, and I'll look forward to helping each and every single one of you to achieve your financial dreams through real estate investment portfolio acquisition. This is Siwin Yi from the Yi Real Estate Network. Thank you so much for listening. I'll see you on the other side. Have a nice day. Bye-bye.